How to flip a house with no money. By the end of this video, you're going to know exactly how to flip a house without using any of your own money. Plus the strategies our students use to make their first deals happen when their bank account is empty. When Amber and I started flipping, we were $80,000 in credit card debt. So trust me when I say you can flip a house without using any of your own money. I know from personal experience. No cash, no problem. In this episode, I'm gonna walk you through exactly what real estate investors do to not use their own money on their first flips. If lack of money is the only thing stopping you, well, this episode is gonna really open up your eyes and show you what's actually possible. First, you do need money. It just does not have to be your own money. But yes, all of this is 100% possible. Look, we still flip over 100 houses a year in our business, and I could not do that using my own money. You must have a way to use other people's money to grow and scale your business, or even to get started. We coach our students with the same techniques, using OPM or other people's money. Here's the good news. You already know how to do it. Think about this. Have you ever taken out a loan to buy a house, or a loan to buy a car, or have you used a credit card? Think about it. You've used other people's money to buy something. Even a credit card, if you buy your meals or you buy clothes, you're using other people's money for a short amount of time, but you are using other people's money. So you already have this skill. You just didn't know you could use it for investing. So let's dive into this a little bit more. You can use hard money loans. Now, hard money loans will usually fund somewhere around 80% of the purchase price of a property. And depending on your credit and experience level, they might fund 80% to up to 100% of the renovation costs of the property. Now, the more experience you have, the better rate that you're gonna have when you borrow from a hard money lender. If they loan 80%, there's still a gap left there. So we call that gap funding. You're gonna wanna find another way to cover that small gap. You have the majority of the funding covered with other people's money. Now you wanna cover the gap with other people's money still. Maybe you have a home equity line of credit you could use to cover that. Maybe you could borrow against a retirement account to use to cover the gap. Maybe you have investments you could borrow against, or liquidate some assets to be able to cover the gap. Or use other people that you know, take a short-term promissory note loan from them so they cover the gap. In other words, you can use other people's money all the way through the process if you use these simple techniques. Now, this route with a hard money lender usually requires credit. They are concerned more with the deal than your credit, but your credit does play a factor. And what I mean is, if you have bad credit, like a 500 or 600, low 600 credit score, you're gonna probably pay a higher interest rate and fees because they're taking more of a risk on you. Where if you have some assets you could back it up with the hard money lender, and you have good credit, well, you're gonna have a much better rate than someone who has a bad credit. Private lenders, I think, is the best kept secret in real estate investing. It's how Amber and I have built and still build our business to this day. It's just average people. They're not savvy investors. They're average people that have money they've inherited, they've built up, they have it in savings, they may have it in an IRA. You can help them put that in a self-directed IRA. There's plenty of videos on our channel that will explain that in more detail if you want to check them out. Private lenders are protected with paperwork like a mortgage. They're named as an additional insured on your insurance policy, so they are fully protected if something were to happen on the property. They get a much higher interest rate than having their money in a traditional investment. They usually make 10 to 12%, and they're helping a family or friend to be able to grow their business together. And some of those private lenders don't have the time and don't want to do the work themselves, but they'd love to be a real estate investor, and that's where you can capitalize and have them loan you the money. And here's the best part. They can loan you, if they're comfortable and you ask for it, not just the purchase price, but also the renovation costs and some holding costs up front, so you don't have to worry about having any cash for the deal. Private lenders are the way you should build your real estate investing business. And lastly, look for creative partnerships and creative financing on deals. There are deals where you could talk to a seller and let the seller be your bank. They'll hold the mortgage for you so you can flip the house. There are programs called Subject To, where you could literally take over somebody else's payments on a property without having a credit check. Again, there's videos in our site that will explain this in detail. You can do what's called a joint venture deal, where you partner with the seller to make the necessary repairs on the house and then sell the house and give them their money at a later date. Or you could even partner with other people. Let's say that you have the time, but somebody else has the money. You could split profits. You might say, Glenn, what's the split? Here's the good news. Whatever you negotiate, 50-50, 60-40, 70-30, I don't care. That's up to you and your partner. But you can negotiate deals so that you can use other people's money and other people's resources to get your deals done. And the more experience you get, the more money options will be available to you as you grow your business. So you may not have the money, but if you go out and find the deal and you bring the hustle, the money will find you. It always does. If you're flipping with other people's money, you have to know your numbers cold. Go watch our video, How to Evaluate a Flip Deal Like a Pro, where I'm going to show you how to evaluate rehab costs so you can present your deal to possible investors with pure confidence and protect your profits and your investors from day one. The link to that video is in the description below.